President Trump sent shockwaves through global markets this week with a surprise announcement. He plans to impose tariffs on goods from all countries. This unprecedented move has been met with widespread condemnation and fear. Many experts believe it will trigger a global trade war. The tariffs are expected to be announced on Wednesday, April 2, 2025. Trump has ominously dubbed the day Liberation Day. However, for many around the world, it feels more like the start of an economic disaster. Trump's decision marks a significant escalation in his protectionist trade policies. He has long argued that other countries are taking advantage of the United States. He claims these tariffs are necessary to protect American jobs and businesses. However, economists warn that they will likely have the opposite effect. Tariffs will raise prices for consumers, hurt businesses that rely on imports, and damage global economic growth. The announcement has already sent shockwaves through global markets. Stock markets around the world have plummeted. The US dollar has also weakened as investors flee to safer assets. The fear is palpable. There is a sense that Trump's reckless actions could unravel the entire global trading system. The coming days will be crucial in determining the extent of the damage. The reaction in global markets to Trump's announcement was swift and brutal. Asian markets were the first to feel the heat. Japan's Nikkei 225 plunged by 4%, while the Topix index tumbled 3.5%. South Korea's Kospi shed 3%, and Australia's ASX 200 fell by 1.7%. China's Shanghai Composite and Hong Kong's Hang Seng Index also registered significant losses. The negative sentiment quickly spread to Europe. The FTSE 100 in London dropped by 1.3%, while Germany's DAX and France's CAC 40 both plummeted by 2%. US stock futures also pointed to a sharply lower open. The Nasdaq futures were down 1.3%, indicating a potential drop of over 150 points. The S&P 500 futures fell by 1%, suggesting a loss of around 40 points. Even the Dow Jones Industrial Average, which had been relatively resilient in recent weeks, was down 0.6% in pre-market trading. The sell-off was driven by a combination of fear and uncertainty. Investors are worried about the potential impact of a full-blown trade war. They are also concerned about the lack of clarity surrounding Trump's plans. The administration has released few details about the tariffs. This lack of information has made it difficult for investors to assess the potential damage. The uncertainty is fueling volatility and prompting investors to reduce their exposure to risk assets. The economic fallout from Trump's proposed tariffs is expected to be significant. Economists warn that the tariffs will lead to higher prices for consumers. Imported goods will become more expensive, and domestic producers will also have an incentive to raise prices. This will hit consumers hard, particularly those on lower incomes. They will see their purchasing power eroded. Consumer sentiment, already at its lowest level since 2022, is likely to deteriorate further. This will weigh on consumer spending, which is a key driver of economic growth. Businesses are also likely to be hit by the tariffs. Higher input costs will squeeze profit margins, and reduced demand will hurt sales. This could lead to job losses and a slowdown in investment. The tariffs also threaten to disrupt global supply chains. Businesses have spent years building complex international supply chains to take advantage of lower costs and specialized production. The tariffs could force businesses to rethink their supply chains, leading to higher costs and disruptions. This uncertainty and disruption are likely to weigh on global economic growth. The International Monetary Fund has already warned that a trade war would be a self-inflicted wound on the global economy. Amidst the market turmoil, investors have flocked to safe haven assets, pushing the price of gold to a record high. The precious metal surged past the $3,100 per ounce mark, surpassing its previous all-time high. This surge reflects investors' growing anxieties about the global economic outlook. Gold is seen as a safe haven asset during times of uncertainty. Its price tends to rise when investors are worried about the stock market or the economy. The current rally in gold prices is being driven by a confluence of factors. These include escalating trade tensions, slowing global growth, and geopolitical risks. Investors are concerned that the trade war could spiral out of control, damaging the global economy. They are also worried about the potential for a policy mistake by central banks. This could further destabilize markets. Analysts believe that gold prices are likely to remain elevated in the near term as long as these uncertainties persist. Jochen Stanzel of CMC Markets noted that gold is benefiting from the flight to safety. He added that investors are looking for assets that are likely to hold their value in times of turmoil. The surge in gold prices is a clear indication of the level of fear and uncertainty in the markets. It is a stark reminder of the potential economic damage that a trade war could inflict.